All right, guys, what is going on? Let's go through the watch list, potential trades for the next couple of days. There is a couple of really good options that I'm excited to show you guys. So three in particular, one is CLSK, the other is VIVO, and the last one is TCS, okay? I like all of these. I'm having a difficult time choosing one. But you can always choose to take all three and just set automatic triggers if you've got three stocks that look really good. So I'm going to show you what I like about these stocks, and we'll get started there. So one of the first things I always look for is a potential high breakout, a new high breakout. And CLSK has that. It has a 52-week breakout right here. Today it literally got above 1539, it looks like. So I think its resistance was somewhere around $15 and just broke above that level. Okay. And so that's a fresh, clean breakout. And if we can see momentum push that even higher, that would be awesome. One of the things I like about this breakout is it has a strong power candle, a strong green one, which says to investors and traders that that was a confirmed strong breakout there. And so we'll have to see how it responds tomorrow. But this is a very simple trade. That's one of the other reasons why I like it. You just set your target for anywhere above the wick of that candle, which is probably like 1580 or something like that, 1550 maybe. That's your target. If it breaks above that area, then you get in, and your stop loss is right here, right below the previous high. It's very simple because the previous high should act as support. And so, you can set that as your support line. But we'll look into the trade details in a moment. Let's look at some other things that I really like about the trade, about this particular stock. It's in the technology sector. And I don't know if you guys know this. Let me pull this up really quickly. But the technology sector has been one of the strongest sectors in in our entire market. Um, I think it's actually been the strongest. So energy is the lowest performing sector so far after COVID. Real estate is the second lowest performing. Utilities is the third lowest performing, and the highest performing sector is technology. Technology, crashed during COVID and then just took off. There was a lot of technology companies that benefited from COVID shutdowns and other small businesses shutting down and not having as much competition and people having to use technology more often. And so any stocks that are within this sector right now are doing pretty well. Most stocks that are in that sector are doing pretty well. And so the fact that this particular stock, CLSK, is in the technology sector, that's a good sign. So we've got a good chart breakout here. It's above all of its moving averages. It's in a strong sector. It's in the U.S. Let's see what else we can find about it. We scroll down here. It's a low float, 15 million. By low float, I mean something under 100 million. That's my own criteria for it. But other traders look at the float as well. That determines how many shares are available to be traded. And if there's a lower amount of shares that can be traded, then the demand will push that stock even higher, right? It just makes sense. The RSI is pretty high, which does mean it is overbought at this moment. So maybe tomorrow will present a small pullback. So maybe we won't get a strong breakout, but we'll have to see. We'll have to see how it does tomorrow. Relative volume, it typically does about 2.8 million, 18 million shares traded per day. But today it did almost 7 million shares traded. So it's 3 times its typical amount, which is great. That's a great sign that traders and investors are getting into this particular stock. Some other things I like about it: sales quarter over quarter. It's doing a lot better post-COVID. So something in COVID has improved the sales in this company. Sales in the past 5 years looks like it's been doing okay. Or maybe most of this number is comprised of this year, but it looks pretty good. So those two things are strong. I like that. And then I go to the news section to see if there's any changing of hands in leadership or any weird things that we need to look out for. Looked like they gave an offer in back in October. That must have caused the price to take a little bit of a dip, maybe not. But yeah, I don't really see anything alarming, and so I like this one. Some other things I like about it, I pulled it up on the chart, CLSK. Let's move out of that. So now that I have that information on CLSK, basically the chart on FinViz, I'll go over to bar chart, get an opinion on it. They have an 100% buy rating on this right now. Of course, that's based on one analyst, so take that with a grain of salt. And then I go to bar chart opinion to see if that's the same story. Looks like over the past couple of weeks, they've been increasing their buy rating on this. And then I go to trading strategies to see if this website would have traded this stock. This is their simulator. If they would have traded this stock, this would have been their results. Okay, so I go to TrendSpotter to see what their results would have been to see if they would have been correct. If they are most of the time wrong on this stock and they're telling me to buy it, but most of the time they're wrong, I shouldn't buy it. I shouldn't listen to them. So that's a good point of reference. So they have been wrong at a total of negative 4,923. So I don't really trust this website's opinion on the stock right now. So I'll go to something else, CLSK, see if we can get an opinion over here. They're rating this as they have a target of about $18. Again, one analyst, so that's not great. Outperform the market is his rating, but there's no hedge fund activity listed here and no insider activity, which is important. Moderate buy, bullish, positive technicals. So this chart looks okay. Everything behind the scenes is looking just okay for this stock. Let's see what else we can find. CLSK. So I like to go to different websites to get different opinions. It's just like if you're uh, buying a car or buying a house or buying something else that's a big deal, and they tell you, hey, have you gotten a second opinion on that? We're going to the doctor. It's pretty important. So I go to a number of sites to see what their view is. So the yellow dot is the industry average for this particular stock. So how others in this same industry are doing compared to this stock. Um, and they're right on average with their valuation, which essentially means the value of the company, right on average with their financials, above average with their forecast, but that doesn't matter because are we in the future yet? No. So anyone can say they'll be 200% to goal in the future. Doesn't mean that that's going to happen. They're underperformance compared to the industry. So, even though I like the technical setup, the potential breakout here, there's a number of alarming things. And as traders and investors, you have to first and foremost protect the risk. You have to be aware of the risk. The risk is the most important thing. And so there's a number of alarming things in regards to risk on this particular stock. So I might skip this one for a trade. Let's go to the next one, VIVO. VIVO is presenting a breakout opportunity right here at the $20 mark. Actually, let's make that a little smaller. That's a pretty thick line. Let's do this one right here, right at the $20 mark. And this is typically the case for stocks. Stocks like to break out as psychological, what we call psychological levels. One of the psychological levels is half dollar marks or whole dollar marks, and $20 would be a whole dollar mark. But not only is it a whole dollar mark, it's also, a critical point because it's the number 20. So usually in multiples of 10, stocks have either a very difficult time or they cruise through that area because they get so much demand to push it through that one particular area. So when stocks are getting ready to break $10 for the first time, usually there's a little bit of a challenge there. When stocks are getting ready to break $20 for the first time, usually there's a little bit of a challenge there, things like that. So that's the clear level that we would be watching. Some encouraging things, this stock has been trading sideways for the past couple of months. And the reason why that's encouraging is because that presents the opportunity for a breakout. That's basically saying this stock could not break down, even though it could not break out of this resistance level right here, it also could not break down. And usually what you see is when a stock reaches, an ultimate level, let's say $26 up here, what happens is the stock then rejects that level extremely hard. It just crashes after that level or just, can't break through. and then it works its way back up, summons the energy and the demand to break through that level, and then pushes through, right? And so what I like about this one is it tapped $20 a couple of times, got pulled down aggressively, big red candle, worked its way back up, got pulled back down even harder, worked its way back up to try to attempt before it even got there, got pulled down, worked its way back up before it got there, got pulled back down, but it keeps coming back and it keeps fighting. And that to me means that the breakout of this stock will be even stronger. If you imagine that someone's, holding a wall, there's a ton of people holding a door closed, and one person tries to push that door open, he's not going to be able to get through. But if someone else, another group of people come in and try to help that person push through that door, maybe the door starts to budge, but if they're not stronger than the people on the other side, they're going to get pushed back as well. And so they go and get their friends, they go and get other people to try and help them push this door open. And next thing you know, you've got a ton of people, more people on one side, and they're also stronger on that side, pushing the door open. Then they'll all get rushed right through that door. They'll push the other guys over, and they'll run freely on the other side. So that's what you can imagine happening with a stock when it has a resistance level such as this that it's touched a number of times. It's getting squeezed into that area, and eventually, once it gets enough demand or a strong catalyst like a news report or earnings or something to push it through, it will explode through that level most of the time. Okay, so I love the chart setup on this. And you probably also noticed that the chart is above its moving averages, the 50, 200, and 20 moving average right here, holding it up and supporting it to push it through. So that's an excellent sign. And then also it's got a ton of support down here at different levels, right? We've got a descending line here that it could use as support if it comes back down. We've got an ascending line here that it could use as support. We've got the moving averages that it could use as support. And usually, stocks go in the direction of least resistance, okay? And in this case, the most resistance for this stock is actually underneath it. And so that can push it up through that lighter level of resistance up here at $20, and we can see a nice breakout. So I love this chart. Some other things I really like about it, it's in the healthcare industry, US stock, of course. And the reason why I like the fact that it's in the healthcare industry is similar to the other one. The healthcare industry has been doing extremely well after COVID. Of course, they've been in higher demand, of course. But if we look at that particular sector compared to pre-COVID back here, we see that this was its high point. It tapped that level a number of times right here, tapped it in January, tried to stay above it, could not, tried to stay above it again in the middle of February, could not. Then, COVID took over and the stock crashed, the sector crashed, most of the stocks within that sector. Then it started to rebound, started to do much better, came back to this level. And this is actually what I mean by that strong resistance levels getting broken through. You see that level was right here. It was right here again. Right here, right here. That was the clear level right here. Tried to break out of it again, tried to break out of it again. Finally, it peaked above it, just a little peak. And that was all it needed for volume to come back in, volume to come in and push this stock through even higher to push it out. Then it tapped, retested this level again, retapped it again. So now that previous resistance level is no longer resistance once the stock is above it. It is now support. And so the stock is now using that level, that previous resistance level, to hold it up. And it did that for the final time here before it decided to run higher. Now, that's the entire healthcare sector. For a stock as small as the ones that we're looking at, they're not going to have, most of the time, they don't have that much of a difficult time breaking through that level. They either break out or they don't. They take a little while and then they break out maybe a few days later, or they don't. We don't really have this sort of investment look to the stock. This is more of an investment look. Okay, but point being, the healthcare sector is doing extremely well, and that's good for any stocks that you're interested in purchasing within that sector. So From that perspective, things are looking good for VIVO. Let's go to the float. Float is 42 million shares, which is about medium. Not bad, not excellent, but not bad at all. About average volume is around 568,000 shares traded, and today it did 1.3 times that amount. And so it doesn't have a ton of volume, as you can see right here. If we draw a line right through here, that's about its average of volume. That comes into the stock. Most of its volume was done, in May, and some bad volume was done in August. A little bit of good volume in November and the middle of November. But this could be a good thing. This could be you have a clear indication of what needs to happen in order for this stock to break out. And so if tomorrow you see the volume pushes through this level, this average volume level, then you know that today is a big day and you need to be on board this stock. So very clear understanding of what's happening in regards to volume on this stock. Institutional ownership, last quarter they reported about 92%. That is extremely high. And if the big hedge funds and institutions are involved in this particular stock, that's where the smart money is, then obviously you need to be there as well. Insider ownership is only about 1%, so that's a bit alarming. I wonder if it's still at that number. Sales is quarter over quarter 26.4, which is good. Earnings quarter over quarter 55.7, which is good. So the fundamentals on this stock look pretty good. And it wasn't, a horrible stock before COVID. It's just doing better because of COVID. So, all right. Then we go to the news headlines to see if there's anything important that stands out. VIVO outpacing its medical peers this year. That's a great headline. But we don't really care that much about it. It's nothing super significant, but it is, good signs, good breadcrumbs within the news. Earnings call. Let's see. Did they have the earnings call already? Q4 earnings and revenues top estimates. So they did really well in November in regards to earnings. And for some reason, the stock still hasn't broken out. And so that's a great sign as well that, maybe we're not late. Maybe the stock still has time to react to all of the good news that's been happening to it. All right, so I like this one. So now I'll go to, some of those other websites as we've done before and just take a look and get their opinion on the stock. So the stock's name is VIVO. All right, so we'll start with the price overview. We'll go to that first. Price overview strong by 88% with the strongest short-term outlook. So they think that it can potentially break out. Let's see, go a little bit more in depth to their opinion. So it looks like this has been increasing. Strongest looks good. And then again, to the simulation for this particular website, they've made a total of 46 trades. And then how many buys? 23 buy trades, long trades, and made a profit off of those calls. So at least they're in the profit, $374 out of 23 trades with this particular stock. Okay, so that's a good sign. The next thing we'll do is go over to this website, see what their opinion is. $28 is their forecast. Let's not get too far away with this one. Basically, they have two analysts on this one. Looks like they're, this is good. This is good, guys. Look at this. So insider activity, the management team has bought 88,000 dollars worth of shares in the last 3 months. And why is that important? Because remember earlier when we saw only 1% of investors who, let me go back to it. Right here, we saw only 1% of the insiders owned this stock. And so it looks like over the last 3 months, they have been increasing their position. And so they think something good is happening with the stock as well. Everything is green right here, and that's an excellent sign. Moderate buy, average price target of 28. So if they're saying the average price target is $28, sheesh, the stock is at $19 right now. I wonder what the high price target is. Obviously a bullish sentiment on it, positive technicals, which we saw. The technicals looked great. Hedge funds have increased their position by 114 shares last quarter, so that's excellent. And the fundamentals look great on this stock, which is something that we noticed as well. And so this is becoming one of my, probably, this is already the top choice actually. It beats out CLSK. It looks really good from a number of different areas. And, I think we should keep this one on watch and set a trade criteria on it. Let's go to the next website to get another opinion. I'm not just going to trust, two of them. All right, so we'll expand this score. Compared to its industry peers, the value on this particular stock is incredible. They are doing really well. Financials are great. Forecast is low, but we don't care about the forecast, right? Because that's basically them projecting what they think they'll do in the future. We don't care about that. We want to know what's happening now, because that's what leads to the future. Performance is outpacing their peers, and dividends, they don't have a dividend, so we don't really care about that. So that looks great. That looked great. And then one more right here, VIVO, technical rating is 7 on this particular website. Setup rating is 8. So they think this has a good chance, a really good chance of breaking out. And the fundamentals, they gave the fundamentals a score of 5. So in the middle, okay. But a lot of good things. Profitability is high. The valuation is low. According to this company, growth is about medium. So, this is a good report. All right. So VIVO is the top choice at the moment for us. Okay. And then let's view one more stock that I was watching. That is on the list. TCS. TCS is the next one that we are watching. And why? Well, it's very simple. If you look right here, you see that breakout area. It's very simple, $11. And remember what we said just now about the psychological whole dollar levels. $11 is clearly a whole dollar level, and it is a psychological level of resistance for this particular stock. You can see right here, it tried to break out of it. It could not. Got really close right here, but couldn't do anything. Tried to break above it here, could not. And now it's trying again. It brought its little brothers, its big brothers, its niece, its aunt, its nephew, everyone that it knows, and it's trying to push through this particular area. So we'll see how it does. So I like that for a potential breakout. The other things I like about it is above its moving averages. Here's the 20 following it and holding it up. Here's the 50, and the 200 is lagging. The 200 is all the way down here. Okay, so maybe that's of some concern. You can imagine if you've got your cousins and you all are running together. If you've got your little cousin all the way in the back and he can't seem to catch up, you might slow down so he can get his slow self up to the front with you guys. But so maybe that might be a concern, but we won't worry too much about that. Kylie's laughing at me. She thinks she doesn't like my references. Oh, she loves them. So we tell the slow cousin to pick up the pace, man. Pick up the pace. All right, let's look at some other things. So it's in the consumer cyclical sector in the US, specialty retail. So I know retail doesn't tend to do too well with stocks, but the consumer sector does pretty well and is doing well right now. And so let's take a look at that sector and see how they've been performing. They are second in the race of stocks of sectors that have been hot and doing well. Technology is number 1, but consumer cyclicals is right behind them right here, as you can see. So it's a hot sector, and that's great. You can clearly see their breakout point back before COVID in February. They tried to break out of this level right here and could not. Got rejected, most likely due to COVID. They probably would have broken out because it looks like they were on the verge of getting there, but COVID happened and they got pulled back down. Then in the middle of June, tried to break out again, got pulled back down, tried to break out again, got pulled back down, and finally took off and ran. Did not come back. So this is a hot sector, which means stocks within this sector are most likely doing pretty well right now. And so that's very encouraging for this stock that we're looking at, TCS. It's in a hot sector. Okay, so that looks good. Let's look at the float. Float's 23 million, so that's good. I like that. Let's look at the volume. Average volume is 1.4 million. And just today, it did 1.2 million. So it is below its average volume, which is okay. Sometimes stocks need to, they're a little indecisive. Like, should we do this? Should we not? Traders and investors are watching. This is a critical area. So some people are sitting on the sideline until they see that the stock is actually through. and others are, just waiting. A lot of people are just waiting to see what happens there. So sometimes you won't see any big volume come into a stock until it actually breaks out or shows a sign that it's, you know, um, ready to go. And if you think about it, it makes sense. Like if you are one of the traders that got involved on this breakout thinking that it was ready to run, you got smoked. If you tried again right here, got in too early, you got smoked. And if you tried again here, you got smoked again. And so, of course, that's going to make traders cautious, especially at these higher resistance levels. And so that's what's happening there with the volume. No need to worry there. I think it can still get through. It just would need to show some sort of confirmation to traders that, hey, we're not going to hurt you again. It's actually a confirmed breakout this time. So insider transactions, woo, looks like they are selling out. The top management guys are selling their shares, and that's not good. That can be a sign that they think that this is the top, and it will not actually break out, because if you are the CEO and you own shares somewhere down here, and you know good things about the company on the inside, and you know that this stock has a really good chance of breaking this level because your fundamentals are strong, you guys have good deals in the pipeline, all of these things that you are already aware of more than anyone else, then you would hold on to your shares because they're going to be worth more, right? It just makes sense. But if you're selling out, then that's a sign that you know something that everyone else should probably know or will know in the future, and that's not good. So, that's not good. Institutional ownership was about 85% reported last quarter. We don't know what that number is right now, um, but there are some ways to find out, and one of the ways is volume, right? So we'll see what happens over the next couple of days. We'll keep this one on watch. Earnings and sales, the big pusher. Sales is quarter over quarter. They are crushing it, it looks like, with 450% quarter over quarter. Oh, that's earnings per share, excuse me. Sales is 5% quarter over quarter. So, one thing is extremely good, the other is not so great. Um, I don't know how to feel about that. Let's look at the news and move on. Should they buy the stock? Should value investors buy it? I don't really see anything here. Why shares crashed on Monday? That's a report. Catches eye, jumps 7. So one day you've got a news report of it crashing. The next day you've got, why it catches eyes and jumps 7.1%. So it's the story that I'm getting, the consistent storyline, right? Because each stock has its own story. And what this stock, the story that it's presenting to us is that one day it's up and the next day it's down, and one day it's up and the next day it's down, and one day it's a good idea and the next day it's not a good idea. And one area is good, it's got good earnings per share quarter over quarter. But the sales isn't that great, and institutional ownership looks good, but the insiders, the management team is selling. The average volume is good. It's above 1 million, but today's volume wasn't that great. The sales float looks good. It's just um, constant up and down and up and down. So not sure how I feel about this stock. Let's look at some other things. Let's get a second opinion on it. We'll go over to bar chart. What was the name of that stock again? Let's take a look. I forgot it already. I'm right at it. TCS, that's what it is. TCS, that's right. All right, let's see. Oops, something went wrong. I was typing too fast there. TCS. There we go. Strong buy, 100%, strongest short-term outlook. Yeah, we'll see about that. We shall see about that. Strength and opinion. They think it's strengthening. Some areas are weak. Of course, this is just based on the fact that it's above all of those important indicators like the MACD, moving average, things like that. Let's see their simulator. How many times would they have been right if they took their own advice? That's a good one, right? People don't like to take their own advice, but they're really good at giving it. And they know that there's going to be some challenges if they take their own advice. So let's see how these guys did. $925 in profit out of 17 trades every time they said buy the stock. They made a total profit of $925 from those 17 times that they bought the stock. Okay, so that's a good sign. That's actually higher than some of the other things that we've seen, which is good. So again, that's another mixed. No, the bar chart actually likes it. Bar chart's reporting good news on that. So all right, let's go to something else. TCS. Let's go over here and analyze the stock, see what they think of it. Price target of $10 right now. The stock is at what, $10? So they think it's right at its, value level. Neutral performance on it. They don't think it's gonna do too much more than what it is. And we saw this already, and we talked about it. The insiders, the management team is selling their shares, and that's not a great sign. They sold 287 million. No way. That can't be true. Maybe I'm reading that wrong. Give me a hard time, but I think the M means million, guys. So, correct me if I'm wrong, but that's not good. The fundamentals don't look that great on the stock, and that's what we saw. One day it was up, next day it's down. The sales look good, but the earnings are bad, or I think it was the other way around. The earnings look good, but the sales are okay, and that's just not that good. The technicals look good. From a chart perspective, the chart looks like it should break out, right? It's at a key resistance level. It's been holding that level. It's got some momentum behind it. It looks like it should break out from just a technical level perspective. However, when you look at underneath the scene, if you pull back that book, if you open the cover and read into it a little bit more, you see the insiders are selling. The fundamentals are not that great. It's a bad date. That fooled you. They got you on the date, and now it's not so awesome. You got to call your friend and say, "Hey, come get me." She's not the one. All right, let's uh, let's move on. So this one still has that average rating. Not a big fan of it. We'll look at one more thing. TCS. Let's see. Let's see what Wall Street the Zen Masters, think of this stock. And similar story to what we've seen the entire time, valuation of about average, close to what the industry is doing, below average financials, and some high level of performance. I think that's due to, um, let's see what we can see here. Revenue has grown. So I've got a revenue boost this year after COVID, but everything else. That's what I mean. It's the same story where valuations average, financials are down, but the performance is good. It's again that up, down, up, down, up, down ride with this particular stock. All right. So with that in mind, we clearly have a winner. The winner is Vivo. Viva Las Vegas. We are going to look at a trade opportunity on VIVO. So I'll show you guys how to do that really quickly. What I need to do is open up Think or Swim. That's what I need to open up, and I'll do that right now. But VIVO looks good. And the reason why, it's got a technical breakout potential, a potential for a technical breakout right here at the $20 level. It's right there. It's shaping up, and it's ready to do it. It's above all of its moving averages. It's above all of these other levels of resistance. And so, from a technical perspective, it looks good. It's in a strong sector. The financials on it look good. So it's showing a great opportunity to really take off and run, because not only does it have a good technical setup, but it has strong fundamentals pushing it through. And that's what's going to make investors excited. That's what's going to make hedge funds excited. That's what's going to make, traders excited about this stock. All of those good things. Everyone's looking at something different. One person is a purely fundamental trader. Someone else is a purely technical trader. Someone else only focuses on volume. Someone else only focuses on sales. But if all of those things look good, then you have a complete picture, um, in which everyone has the same opinion of the stock. All right, so now let's create some criteria here. Okay, so now I bring up Thinkorswim, and the goal here is just to identify the key levels on the chart, set up my automatic order, and then go from there. Okay, so here's my daily chart. This is one day, and we'll do one. I want to see how the stock performed every day for the past year, and we can see that right here now. Looks similar to what we saw on FinViz. And now what I'll do is draw the important levels on that chart. So we know $20 was an important level, right? So we'll draw that right here in this area. I'll put it right at $20 actually, just to be safe. $20 was an important level, okay? Awesome. And then, so now we know $20 is the breakout level. That's our trade, right? Where's our support in case it tries to break through that and gets pulled back down, right? Where do we hold the stock next? Where's our stop loss? Well, I think the next level is right here, right? You see where the stock currently is, and we see that this was resistance for it previously right here. We see that there was some action right here. We see it tried to top this right here. We see right here is where it stopped today. I mean, the next confirmed level is right here, a little bit lower at 1925. But, 1946 looks good. You can also draw one here if you want. And so this is what we might consider, the support area for the stock, and you can determine which one of these you'd like to be your stop loss depending on your risk, your amount of risk. If you have a higher amount of risk, you might go lower. Your stop loss might be lower. But if you don't have as much risk, then maybe you should either decrease your share size on this trade or move your stop loss up. But again, that's a challenge because you don't want to move your stop loss too high, because then you might get stopped out if this does make a quick pull back down and then runs higher. It happens all the time to people. Don't think it won't happen to you. All right, so next we'll draw our target. And what is our target based off of? Well, same thing support is based off of, same thing that our entry is based off of, resistance on the chart. Okay, so what we're saying is if this stock breaks out of this level right here, this $20 level, if it finally actually does it, if it summons up the power to do it, then where is our target? Where are we taking it to? Where's the next area where we're going to take it to? So here's the $20 area. It breaks through this, runs higher. Where do we get out? What do we do? This is just like this random zone, right? We take it right here. This is clearly a level of resistance for the stock or support. You can see right here, the stock came all the way down and touched that basically $22, that level. And again, that's going to make sense to you because stocks, they like that whole dollar level, right? We spoke about that. It was on an uptrend, ran into a little bit of trouble right here, and then continued higher, and then broke through this level. Something bad happened and just got pulled back down. All right, so 2198 is the first level there that we can watch. But if you want, a stronger level, because this $22 level only has a couple of touches. It has a touch right here, a touch right here where it was support, where it was resistance right here, but a strong break below. Didn't even think about it right here, right? So if you want something else with a little more confirmation, maybe 2315 might be your ideal place, right? Clearly there was some support right here, and we'll just zoom in so you guys can see that a little bit better. Clearly there was right here at this 2314 level, clearly there was support right here. Clearly there was some resistance right here. Clearly there was support right here, and then it just ripped right through it. Above that, it's right here. You can see it. But are you holding that stock all the way up to 24? Who knows, right? Do you realistically think that this stock is going to break through $20 and run up $5 in one day? Who knows, right? I'm not going to do that. I'm going to take it to the first profit area and adjust my share size so I can be in a good profit situation based on that easy move right there. But if you want to hold it all the way through this, I don't think you should. I'll just be honest about that. All right, so that's my target. That was nice and easy, right? You're just looking for levels where the stock has had some level of challenge before. My stop loss is going to be somewhere here. I think I'm going to choose the first level, right? I like safety. So we're going to choose that one, and I'm going to make that line red. So it's very clear to me what is happening on this chart. I know the red line is my stop loss. Do not go below that. Maybe I'll, if it does get pulled back down, maybe I'll decrease my share size so I can hold it for a little bit longer and take it to the second stop loss area right there, the second support level. And if it breaks below this, and that's an ultimate no, get out of the stock. But I'll make that decision on my own. You guys can determine what works for you. But either way, the red lines for me are easy to see on the chart. That's stop loss or support. The first green line is easy for me to see on the chart. That's my entry. Stock breaks above that level, I get in, right? Really, I want it somewhere around $20.15 because I don't want to get faked out. So I want to give it a little bit of room to break out. I don't want to take it right at $20 because it can go up there, tap it, and get pulled back. And then you're stuck in the stock. You bought it at its highest point and it just came back down. So you really want to see it break through that level and confirm it and then take your entry. So I'd be looking for an entry on this, somewhere around $20.15 or $20.20 would be where I think the stock is ready to run higher. And then my profit target is $21.98, basically $22 if you want to round up, guys. All right, so let's see if I like to see if those levels match up to other areas on the chart. So in order to do that, I'll scroll all the way back to 2 years, see what we see. All right, nothing in here, wasn't even at that level 2 years ago. Let's go to 3 years ago and see what happened. All right, so 3 years ago, we see right here, right? My stop loss, that stop loss area that we already drew acted as strong resistance for the stock before it got pulled back down. So this is a significant level for the stock, clearly. Can we go back any further? I don't believe so. I mean, we can, but I don't think the stock has much price history any further. Exactly. It was down here. So, okay, these levels are good levels. The only information we have is right here in this area for above the stock. So I'm trusting what we drew there for my support and resistance levels. The other thing I like to do, I'll go over to a shorter time frame. And the reason why I do that is to see if there's anything that I'm missing, right? It's easy to see it on the outside, the larger time frame, but you want to dive in a little bit deeper to see if there's some things going on that you might have missed or to see if your picture is accurate, okay? So the lines that we drew on the daily chart back then, this is my 1 minute chart, 1 day. This is my 5 minute chart. It has 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, I think, 10 days on it right here. Each candle represents 5 minutes of time of price action. And then this one is my 15-minute, 15-day chart. So each candle represents 15 minutes of time, how that stock performed within 15 minutes. Okay. And what we can see, I usually go straight over to the 5 minute one to see what happened. And we can see over the past week, the stock has been tapping that level, that stop loss level. Tap, tap right here, tapped right here in pre-market, tapped right here in pre-market, tapped. And finally today was the first day in quite some time. This stock is above that level. On the 15-minute chart, you see right here, back on a few weeks ago, the stock actually did get above this $19.25 level, but got pulled back down dramatically, just demolished, just obliterated, like had no hope, just dropped, right? But now, for the first time, it is above both of these levels, not just the 1925 level, but also the 1946 level, okay? And so what we're doing now, I'll zoom into this 15-minute one over here because that one stands out to me. What I'll do right here is draw a little line because I know that, in order for me not to get faked out, if it gets above $19.60, it's trying to build some momentum, okay? My entry is not until $20 anyway, but if it gets above $19.60, watch out. This thing is trying to gain some momentum, okay? All right, so that is the gist of it. I'm only going to tell you guys about VIVO. If you'd like to learn more about some of the other trades, pay me $20 an hour and we can talk. We can get something going. Might be a little bit more than that. Okay, how much should we charge them? 50 an hour? 22. I'm at 50. 22. Well, we meet in the middle. We'll say 25. All right, $25 an hour, and we can talk. All right, guys. All right, that's the trade setup. Be careful out there. Stick to your stop losses. It's extremely important. Manage your risk. It's more important than anything else. and then the profit will take care of itself. Do not think to yourself, how can I make the most money? None of that stuff works. Your strategy, your trade needs to be focused on how to protect your money in case something goes wrong. Everything needs to be focused on how to protect yourself first and foremost, and then let the profits do the rest, okay? And that's why we got rid of all of those other stocks that presented larger opportunities for risk than VIVO did. All right? All right, guys, take care. Still recording, Kai. Still recording.